They're already in your neighborhood, quietly buying up properties, acquiring homes, seeping into streets you thought were safe. They say it's an investment. We say it's a takeover. BlackRock, the largest asset manager in the world, is often accused of doing something most people thought impossible: buying up America's neighborhoods, evicting the dreams of the middle class, and funneling control into the hands of a few ultra-wealthy. What looks like modernization or capital flow may in fact be the dismantling of generational wealth, the erasure of home ownership, and the concentration of housing as mere asset class, not shelter for families. The narrative floating around on social media is simple, powerful. BlackRock is buying your house. But when you scratch beneath the headlines, you'll find nuance, deception, and alliances that make the story far darker. First, let's look at what is true. In recent years, real estate investor activity has surged. In the first quarter of this year alone, investors purchased 265,000 homes in the U.S. That's a 1.2% increase from the same quarter a year prior. Nearly 27% of all homes sold in that quarter were purchased by investors, the highest share in at least 5 years. That shift in market behavior should alarm anyone who values the idea of the American dream, home ownership. These investor buyers are not your neighbors or small investors. Many of them have the cash, institutional backing, or scale to outbid ordinary people. They move fast. They pay in cash. They absorb risk. They don't care about patchwork tweaks. They care about control. And although BlackRock claims it is not buying individual single-family homes, critics argue that the truth is more complicated. BlackRock's public defense is clear. We are not buying individual houses in the U.S. They say they invest in mortgage securities, financing large multifamily properties, or backing companies that control residential real estate. They own minority stakes in companies that own rental home portfolios. But the problem is not just surface ownership, it's influence. Because even if BlackRock is not personally writing checks on your block, if it owns equity in firms that do, or facilitates capital or sets tone and strategies, it indirectly shapes who gets housing, who loses it, how rents are raised, and how tax policy is bent. This is the invisible hand controlling your block. Now, imagine your street. A family home listed. A young couple hopes to buy it, but a large investor with deep pockets swoops in, pays more than list, offers cash, closes faster. The couple is outbid. The home becomes a rental. Overnight, your neighborhood morphs. Local landlords become corporate landlords. The connection between community and owner is severed. Rent goes up, eviction becomes easier, maintenance becomes cost-driven, not people-driven, and when enough homes on your block get absorbed, the area changes. Property taxes rise, local services shift, local schools adjust. The financialization of housing turns human lives into spreadsheets and monthly yield targets. What was once your neighbor's property is now a line on someone else's balance sheet. You might hear that. Corporations owning neighborhoods is progress or scale efficiency. But what benefit does that serve? It helps the rich, crushes the middle class, and makes life harder for the poor. When land is held by Wall Street, you can't build generational wealth from a house. You rent into infinity. You relinquish control. You lose stake. Now critics will push back. BlackRock doesn't directly buy houses. Institutional buyers own only a small fraction of the market. They cite data showing that institutional buyers who acquire 100-plus homes represent under 2.5% of overall purchases. They say homeowner-occupied sales still dominate, and that claims of Wall Street domination often exaggerate. Yes, those numbers matter, but numbers can be misleading. Because scale doesn't have to be massive to have impact if it's concentrated in key neighborhoods, regions, and markets. If one corporate buyer dominates in one city, that city changes. If they target neighborhoods with upward mobility, they choke out upward mobility itself. Big pockets can influence zoning, push for tax breaks, insulate themselves from regulations, lobby for deregulation. They change the rules while appearing external. And don't forget, BlackRock recently acquired Elm Tree Funds, a real estate private equity firm managing billions in assets. That's not buying your block, but it's absorbing firms that have control over commercial and residential real estate. That's an expansion of corporate grip over real estate infrastructure. If BlackRock is pulling strings behind the scenes, financing the game, owning shares, backing giants, it's still complicit. It's still part of the machine. And we can't ignore its role simply because its ownership is indirect. Imagine a world where your only option is rent, where the entity managing your home is distant, faceless, profit-driven, where eviction policies are impersonal, where your fate is decided in boardrooms you'll never see. That's not the future. That's servitude. That is corporate feudalism. We once believed in the right to own a home, in generational equity, in building something for your kids. But when firms like BlackRock and their proxies absorb more of the housing supply, those rights erode. Home becomes a commodity, about cash flows, about yield, not family, and if we do nothing, neighborhoods will vanish. Community cohesion will fade. Local stakeholders will disappear. Resistance will be harder because the more property they own, the more power they wield over local politics, zoning, development, and infrastructure. They can rewrite the rules of your city. This isn't just theory. This is a battle for who controls space, who owns residents, who writes the rules. Corporations like BlackRock shouldn't be allowed to have that much sway over fundamental human needs. They should not be allowed to profit from displacement. They should not be allowed to convert homes into abstract assets. They should not be allowed to choke off the middle class's pathway to ownership. Too many people accept that markets are markets, as if markets are living, breathing moral choices, not engineered systems. These systems favor the wealthy, and when the biggest players can bend them, when they can be silent landlords over your block, when your neighbors become units, you realize we're losing more than property. We're losing freedom. So when you hear whispers online, BlackRock just bought your house, don't dismiss it. Even if BlackRock didn't directly buy your home, watch its footprints. Watch its capital flows. Watch its proxies. Watch the patterns. Because the takeover isn't always obvious. Sometimes it's invisible. Until the last house is rented, we can push back. We can demand transparency. We can question zoning laws. We can push legislation banning corporate ownership of single-family homes or limiting institutional buyers. We can support local ownership, community land trusts, co-ops. We can reclaim space. We can refuse invisibility, because if we don't push now, neighborhoods will belong not to the people who live in them, but to distant portfolio managers who see homes as dollar signs, not human lives. If you're awake, you already know what to do. Hit the link in our description and subscribe to our free underground newsletter.